Hello, everyone, and after 1 week of pause, welcome to another weekly market recap. Let's see if we are live on YouTube. The stream seems to be up and working well, so I'm happy to see you guys joining here. Happy to be here after the week where we went on to the Traders Fair in Philippines. As always, we're gonna take just about a minute to let everybody join in, settle down, and get ready for our recap. In the meantime, please let me introduce to you my co-hosts. To my left-hand side is Bruno Perinelli from Argentina. Hi, Bruno. How are you doing today?
Hi, Oliver. Hi, everyone. I'm pleased to be here back again.
Wonderful, wonderful to be here as well. Jake, how are you doing?
Yes, hello everyone. He's doing great. It was the last experience in the Philippines Trade Fair. It was a fruitful and great one.
Yeah, I would also want to thank you before we start for coming to the Traders Fair, for participating, for coming to show your support and asking questions. Getting to know our traders in person was an awesome experience. But now let's get back to business as usual and have a look at what have been the most important events of the previous week. Bruno, can you get us started on the European and American events that have influenced the markets over the previous week?
All right. Yeah. Let's see. There's been some relative hawkish Fed statements, which left the door open for more rate hikes. Also, the first quarter GDP, the first revision was actually came in a little bit above expectations, and the GDP first quarter prices also were higher than expected. Jobless claims below expectations. We got some labor indicators as well that showed some strength in the U.S. economy, and also we've already seen some that the Fed pause was already priced in, so that's why the USD outperformed 6.51% in this last couple of weeks. Then in Europe, the CPI just came in a little bit below the previous expectation, the estimation. That was last week, actually. And in the UK, the CPI came in higher than expected. Gilt yield is going up, and the pound has been a little bit going down against the USD, but I think this could be temporary. Also, the Japanese yen got hurt by a rising bond yield across the developed world. So I think those were the main events of this last days, I would say.
Thank you for the info, Bruno. Jake, what have we seen from the Asian markets that is worth talking about?
Um, this week, the most important event is the interest rate from New Zealand. And as we can see, last Wednesday, we saw a weakness from New Zealand dollar. So after they hiked their rates by 25 basis point, but their accompanying statement was dovish, saying that yes, they hiked, but they hinted that they will be stopping their hiking cycle. And prior to that, the expectation from the market, there was a 50-50 expectation for 25 and 50% for hiking by 25 basis point. It turns out they hiked 25. But what the market was focusing more was this statement, which is a lot more dovish from the RBNZ. And yes, that's it for this week.
All right, thank you. Um, so we have quickly recapped what were the most important events of the previous week, and now that we know what has happened, it is important that we look towards the upcoming week. It's our time for the predictions or to let our traders know what they can be expecting. So, Bruno, in the upcoming week, what can we be looking forward to? What should we be careful about when it comes to the American and European markets?
Well, next week the consumer confidence is going to be released. Also, the job openings and the NFP labor reports. Um, it's also going to be released next Friday. We should be looking at the labor indicators and how much the consumer confidence goes up or down, because it shows how the U.S. economy is performing, and in a way that is weighing where the USD, US dollar, is going. So we also should be looking at the yield curve, and if the yield curve, I mean, across the developed world, I mean, and in not only in the US but also in Great Britain, in the European Union, and other developed countries, if they keep rising, the yields keep rising, then that could hurt the Japanese yen. In the euro area, we got the May's inflation preview, which could also affect the forex market. So I think that we should be focusing on those events and how they affect bond yields and the forex prices.
Thank you. So we have the NFP coming up. We have quite a lot of big news coming up. So I just wanted to say to traders that if you're not specifically a news traders, we recommend caution, because those times can get pretty volatile. So just make sure that your risk management is on point there and that you're not losing your capital. Jake, what can we be expecting in the Asian sessions over the upcoming week?
Based on our calendar event, we only have Australian CPI. And well, personally, I would like to see it a higher number, because that will be a trading opportunity to buy the AUD NZD. So after we saw some weakness from the New Zealand dollar, if that will be boosted by the higher CPI from Australia next week, that I'm expecting for a further upside for AUD NZD next week. And we have also to be aware of that one of the factors that will be driving market sentiment next week and then coming weeks, probably today, will be about the debt ceiling in the United States. And for me personally, I don't know honestly what will be the possible market reaction if finally they will set an agreement of the debt ceiling in the US. So I don't know if that is something weakness for the dollar or strength for the dollar right now. So I'm not sure if what can you say about Bruno? What is your expectation during if finally there will be an agreement?
Well, I think, yeah, I think that if there's a final agreement, well, there's going to be some risk-on sentiment across the markets. I think bond yields are going to go up, and along with that, we could see. Yeah, I'm not sure if the USD is going to strengthen or it's going to weaken after the debt ceiling got up, if the debt ceilings lift up. But it's going to be interested in I mean, the sure trade, if bond yields keep rising, is to short the Japanese yen or the safe haven assets. That's what's been happening recently.
So you are more leaning it will be a risk on for the market.
Yeah, I think so.
Yes.
Yeah, if on the contrary, if there is no final agreement and the US debt enters a default, I think that would be a mess for the whole financial system. So that would be a great opportunity to go long Japanese yens and gold ounces. But I wouldn't. I mean, I'm not considering as an option, as it's very unlikely to happen.
Okay, good. But also my expectation, if there will be a market reaction, I don't see it really as a medium-term bias, but it will only be a short-lived volatility in the market.
Yeah, sure. Yes. A lot of volatility.
Well, guys, thank you very much for your insights today. And I thank you for participating and sharing your knowledge in the weekly market recap. And we'll see you once again next Friday at 11 a.m. UK time. Until then, have a great one.